Hey everyone, welcome. I'm London, and today I'm going to talk about how can you get qualified with a new LLC as a small business owner, as an individual. How can you qualify for these unsecured business credit cards, anywhere between $20,000 all the way up to $100,000 in funding without showing any proof of income? Let's get into it. So the first thing I want to tell you is when it comes to these financial institutions, when it comes to these creditors, when it comes to these lenders, the reason why they have these different type of products is because they understand that entrepreneurs like yourself, small business owners like yourself, self-employers like yourself, don't get paid the traditional way, which means maybe no tax returns, maybe no W-2s, maybe we don't get paid bi-weekly. So in order for us to qualify for their products and their services, they have to come up with an alternative way, meaning stated income business credit cards or stated income loans. So when you hear individuals say no docs, that's what they're referring to. The proper terminology is stated income loans, stated income business credit cards, where you can qualify for a certain amount without showing any proof of income or low documentations. Sounds great, right? Because it is. Because as a small business owner, as a new LLC, we want to get access to funding the easiest and the fastest. I know you do because I do. And a lot of other entrepreneurs do too as well. So that's the best way, because here's the thing. Going down that rabbit hole, right, showing lenders and creditors all different type of financial statements such as P&L statements, cash flow statements, income statements, profit and loss statements, bank statements, tax returns. The more documentations that they uncover, the more likely you will not get proof of funding, because they peeling back what's underneath the sheets, right? The curtains. So if it's some things that they don't like to see, maybe you have overdraft fees, right? So if you have an excess amount of overdraft fees, if you even have one overdraft fee and they checking your bank statements, you can get turned down. So we want to make sure that we have to show them little documentations or no documentation when we're trying to get approved for capital, for funding. So this is why I love this product. This is why I love income stated business credit cards, because it's little to no documentation. So now let's unpack that. Let's break it down. Why does these banks have that? I already told you why, but let's break down the process on how we can get access to these income producing credit cards, right? Without showing any documentations. Well, here's the thing. First, let's break down what is income. So when you're filling out that big business application and they ask you how much revenue are you making in your business, this is where most of you guys freeze up. Cause you're like, dang, I haven't made any revenue in my business, or I'm only making minimum like $1,000 monthly. And I don't want to lie on this business application, because you understand if you lie on the business application, well, you should understand if you lie on the business application, that's committing bank fraud. And we don't want to be in that position, right? Get fined, maybe possibly get some jail time. So we don't want to be in that position. But here's what they really ask you. Let me break that down, because these banks, these financial institutions, they slick. So here's what they really ask you. They asking you is, how much do you think you're going to make in your business? AKA your projected income. Projected income means based on your future revenue, based on your future contracts, based on your future invoices. How much do you think, as a business owner, as CEO of your business, how much do you think revenue you're going to generate annually? You can put that number down. It's perfectly fine. So if that number is $50,000, if that number $100,000, if that number $200,000, you can put that number down. And here's the thing too. A lot of applications will ask you too as well, household income, which means you can not only your income, your spouse income, if you have a brother live with you, their income, but you also can break down other access to other revenue streams of income, such as maybe babysitting, maybe you have a hustle on the side, maybe your retirement, maybe your Social Security, your 401k, maybe you have another small business on the side, maybe you have another job. You can put down all that defines as income, your overall income. You can put that number down. So if that number, your income was $150,000. Now you add all the other income revenue streams of revenue that you have coming in. Maybe now that number is $150,000. So you can put that down on your business credit application, and you will not be committing bank fraud, because that's what they really asking. Now you might be asking, why would the bank allow this, right? Why would they allow me to state my income? Because now that's what it's called. That's what it's called. Remember I said stated income business credit cards, or stated income business loans, because whatever you state on that paper that you make, they are going to take your word for it. Now, why do banks do that? Well, simple. Because banks only care about two things. This is really important. They care about two things. Listen up. They care about your willingness to pay them back and your ability to pay them back. So I'm going to talk about your willingness, which supersedes your ability. So when we're talking about your willingness, it's predicated and it's based off your business owner credit, aka your personal credit, and also your business credit profile. It tells them everything they need to know about who you are as a small business owner when they're looking at your business credit profile and your personal credit profile. So, for example, if they're looking at your payment history, this is your willingness to pay them back, meaning, do you pay your bills on time? Is it 95%? Do you have 100% payment history record? Well, based on that, that's all they need to know. You're paying your bills on time, so you have a good track record, which means your willingness to pay them back is very good. Now, also they check other things, such as how long have you managed debt, meaning your credit history, right? Have you managed credit? Have you managed debt for 2 years? Have you managed debt credit for 5 years, 10 years, 20 years, etc.? So they look at that to determine to see if you are willing to pay them back. Next, one of the other key factors that they look at is your debt to credit ratio. Do you know how to manage debt? That's huge too. So meaning, are you over using your credit cards? Is your debt to income ratio high? So they look at that to determine to see if you're willing to pay them back. You get what I'm saying? So that debt to income ratio, aka your credit usage, is that 10%? Is that 20%? Is that 30%? Is that 80%? That shows them that you know how to manage debt. Another thing to look at, are you being thirsty for credit? Which means, did you know if you have an 850 credit score, which is the highest credit score we can get, FICO score we can get on our personal credit profile, if you have too many hard inquiries, if you have an excessive amount of hard inquiries on your personal credit report, lenders and creditors will turn you down due to you being frivolous for credit, or due to you being AKA looking thirsty for credit. So this is why those are some of the key factors that they look at to determine it, to see if you're willing to pay them back. So your ability is based off your income. So your willingness supersedes your ability, because it tells the story as far as, do you pay your bills on time and over a period of time. That's primarily what they care about. So if your willingness is super strong, then they don't care much about your income, which is your ability. Now, don't get me wrong, your income is very important, because that's the ability that you pay them back, knowing that you have revenue in to actually pay it back once you borrow the money. So it's very important. But how you get qualified is by having a really strong willingness to pay these lenders and pay these creditors back. So this is why we have to work on our personal credit profile, on our personal credit score, our FICO score, to get that number as high as possible, so we can tell these lenders that, hey, if you lend us this money, we'll be able to pay you back. So this is why you can get away with having zero to no income as far as you actually making it in your bank account. But if you state that you make $100,000, which is called projected income, you'll be okay to get funding from these different financial institutions. So I hope that helped. Next time you fill out a business credit application, understand that's what they really asking you, projected income, and you can state how much that you think you're going to make. See you on the next video.